Money Ki Baat. Money Ki Baat on January 28, 2017, one day before the Prime Minister's Mann Ki Baat. I am G. Ramachandran, Ramach to my associates and to my friends, and my email is indiagrow@gmail.com. The four principal events related to demonetization and or remonetization. The first, interim report submitted by the Committee of Chief Ministers on Digital Payments on January 24. Then came the President's address on January 25. The Prime Minister's Mann Ki Baat on January 29, that's tomorrow, and finally the Finance Minister's Union Budget on February 1, 2017. The COCM had two principal sets of tasks. The first, suggest measures to enable all sections of the population to migrate to the digital payments. The second, to recommend measures to leapfrog into the advanced digital payment systems of global standards. I think we can do both. Let's look at the gap that separates India and Singapore. India is far behind in the adoption of non-cash payments as a system and as a set of transactions. Way behind, absolutely way behind. And there are several constraints that the committee has listed. 7 of them are here. There are 7 constraints that the committee has identified. I notice that they've listed attitudinal change and training as one of them, but more importantly, they have listed digital transactions being costlier than cash. This reflects the cash is queen and king assumption. India lives with this very important belief that cash is king or cash is queen, and to have no gender bias in my statement or in my presentation, cash is queen and king. That's the assumption in India. We need to discuss this. Digital transactions are seemingly costlier than cash transactions. Cash transactions are seemingly cheaper than digital transactions. And this will need an attitudinal change before we really abandon paper money for digital money. Cash transactions appear to be cheap because a significant part of the total system cost is borne by the government. Do I pay for the paper on which a currency note is printed? Do I pay for the ink? Do I pay for the printing of currency notes? Do I pay for the efforts of the Reserve Bank of India, the RBI? Do I pay for the efforts of the RBI to periodically replace old and torn currency notes? Do I pay for the efforts of the government to deter and to eliminate the printing of counterfeit currency notes? The answer is no to all these questions. Government bears a very large component of the total system cost in the cash system. Government bears a very large component of the total system cost in the cash system because it's a beneficiary. Government collects taxes, direct tax and indirect tax, from us. That's the way government is a beneficiary of all commercial transactions. The private sector too bears a very large component of the total system cost in the cash system. The private sector bears a very large component of the total system cost in the cash system because it too is a beneficiary. I do not pay the shopkeeper any explicit fee to count my money when I buy my grocery because the shopkeeper is a beneficiary. The private sector bears a very large component of the total system cost in the cash system. Consider armed guards, fireproof walls, waterproof walls, bulletproof trucks, and fire retardant safes. Consider insurance and the premiums too. Therefore, it's a myth that cash transactions are regarded to be cheaper than digital transactions. It's a measurement myth, assumption myth. It's also a myth that checks are cheap. All of India needs to wake up to total system cost. Beneficiaries pay for the cash system. Profits and taxes are the sources that cover the explicit and the implicit costs. All of India needs to wake up to the humongous total system cost of the cash system. And this is exactly why I thought I should look at attitudes around us. Digital systems are actually cheaper than cash systems, and cash systems are actually costlier than digital systems. We need an attitudinal change. Towards this, let's consider the components of total system cost of money. There's value creation, there's value preservation, there's value protection, value transmission, and value attribution. All these five are cost components. And when you consider the aggregate cost of these things put together, digital money system is a winner. Moreover, digital money system is a winner in each of the five components. It's not merely the aggregate costs. But paper money system is a loser in each of the five components, and we thought that digital money is costlier than paper money or cash money. So what are the efforts that we need to take in order to move India from cash money to digital money? And here the committee has said that government should lead the way, give overall direction, consider policy decisions, and consider executing it. So let me state this all over again. The interim report of the COCM on digital payments identifies government as a stakeholder. Truth is, government is the principal beneficiary of all transactions. The truth is, government is beneficiary first and then a stakeholder. Therefore, I think government should lead the way, government should give overall direction, government should make policy decisions, and government should execute, and that's exactly what the COCM has said. But I have one more recommendation. Government should own and operate the digital money system. Government should own and operate the digital money system just as it owns and operates the cash system. Government should own and operate the digital system because digital money and cash money are fungible. All others in such an environment will be technology vendors. These technology vendors will compete with one another continually to provide the best service with the highest reliability and at the least cost. And don't get very wild or worked up. Didn't India get its coins and currency notes made elsewhere? Yes, it did. When the government of the day felt that public savings did not flow adequately as credit into the total economy, private banks were nationalized. So India has done several things. It has nationalized private banks, it got vendors to provide coins and currency notes while it operated the cash money system. Therefore, we need to look at the costs and the risks involved if government were to own and operate the digital money system. In order to provide for this comparison, I wish to bring to your notice the risks that nationalized banks faced, just as all of the banks do. Nationalized banks bear credit risk, market risk, and operations risk. In comparison, the nation-owned and nation-operated digital money system will neither be exposed to credit risk nor to market risk. Operations risk will be mitigated by building bulletproof digital systems whose costs will be covered by the avoidance of the enormous costs related to the paper money system or to the cash system. These operations risks actually would be a whole lot more if a bunch of privately operated digital systems had to work together to make India an e-money economy. But we are not taking those things into consideration. Consider interoperability and collusion among them. These operations risks will be a whole lot more if a bunch of privately operated digital systems had to work together. And you may want to suggest that we should allow a private sector operator to be a monopoly. That too would be wholly unacceptable. Therefore, what do I have in mind? Government should own and operate the digital system. Very clearly, digital systems are cheaper than paper money systems or cash systems, and the risk involved in the digital system is considerably lower than the cash money system. Therefore, my recommendation is the government should own and operate the digital system. Thank you for your time. Thank you for watching. I am G. Ramachandran, and my email is indiagrow@gmail.com. Thank you again.